Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, April 24th, 2024. It's 9:02 a.m. Eastern Time. I usually don't start the videos until market gets going, but I've got to run out, step out of my office a little bit today, and so I just wanted to get one out. I fired off this post. That's probably what I'll lead with. That's the most important thing, or this chart. It was a 15-minute chart, so 3 weeks of price action, 15-minute chart of NQ. And as I told you, this is, um, you know, can't ever say the final lot because I never put every penny I have. You always have to leave a buffer in your account. But I'm back to a pretty aggressive short position as of now. I was looking for that marginal new high. I wanted to see that divergence. And you know me, I like me some divergences, whether they're bullish or bearish. That's bearish divergence. And you also know that I tend to, or I like to, if I'm targeting a move up to a certain resistance level, whether I'm long and I want to close that position or whether I'm waiting to get short, I'm going to step in and sell a little shy of it. So the level was at 17,793, and that's it. So fired that off, got my last bit in there. And, again, there's always room to add depending on, other positions, how things are going, whether I'm partially or indirectly hedged or not. But like I said, I gave you a couple more levels. I color coded them after on the drone tool. That was a yellow line right there, which I think will probably be the end point. I'm pretty confident. There's the next level there. If we get there, and I just I have the urge, and I'll fire off some more. And then this is a level, the max level. I want to see 1853. Call it 1800. That's the bottom of the trading range. You're not seeing it here, but that's where we broke down. That was a big sell signal. That was the 433 QQQ level I've been harping on for weeks, if not months, waiting to see break. And so that's it. So this is a pretty much a nice setup in my opinion. Like I said, we've had a lot of check marks, not just QQQ and NQ breaking down, but many of the other sectors of the S&P 500. Somebody asked yesterday, gosh, I can't recall if I covered it in the video or not, but I did reply to that. And I'll get to some questions today, time permitting, at the end of this video. But no, it was actually a reply to a comment. And the question they asked about the sectors in the S&P 500, particularly financials and healthcare. And so those sector ETFs are XLV for healthcare and XLF for financials. And yeah, they're both, I replied, they both, as well with the top 5 sectors, the largest, all broke down. They're still well below the breakdown levels, some even back testing levels, resistance levels. So no, those are pretty, very much on sell signals. And all this is bigger picture. I wanted to point out the trend line too, because I didn't mention it, but you could see it drawn this morning. That gives us this wedging type pattern. And look, the opening bell is about to ring in 15 minutes or less. We're gonna, they could pop it here easily, and then we're still gonna have that, as I drew it out before, a divergent high into resistance. And then again, how you want to trade it. If you want a little more cautious, you want a sell signal instead of just a rally back into resistance, then you want to see this trend line break right here, this uptrend line, and then you can see where the likely support levels are. So that's it. And guys, remember, it's not a big range. Remember, we were, this is all, one trade with multiple entries, even a reversal. The day after the FOMC meeting, we shorted. That was the high. And I mentioned in that post I got out to you that we were also not just, at price resistance, but if you look at that's it. That was that short entry, which again, I said for active traders, you could short down to the bottom of the range, which is 1850 on NQ, which we certainly hit. Or swing traders that are, because I suspect if we went back down, we'd break down and go through the range. And so longer term swing traders could just, short here and hold out for the breakdown. And that's what that is. And then, of course, I mentioned clearly on Friday and again Monday, covering shorts to game the bounce. So we got, big, good part of it, and started to scale back in, and that's the plan. So that was I think 8% drop off the highs, 3% bounce so far, give or take, and then that's it. So that's how I think this will play out. And I'm going to talk a little bit about the big earnings coming up, including Tesla. I saw that in one of the questions this morning. So that's it. So I just want to point out, you can see the fibs right here, Fibonacci retracements. For those not familiar, look it up, Google search it. They're great tools to use in trading, investing. I've used them for years. I don't cover them every day, but I keep an eye on those levels. And when you're in a primary trend, so I'm going off, and the only time will tell if I'm correct. That was the top in the or a major top, yeah, the top. We'll call it whatever you want to call it. That's what I believe it is, and this is the start of a new downtrend with so much more to come. That's my outlook. And if that's the case, again, because I have to say that the intermediate term trend coming up is still bullish. All this is an 8% correction and a much bigger move at this point down to the lows. But where I was going is, if I'm correct, then, and this is a new downtrend that's begun, typical counter trend bounces are typical. It's not a set rule, but from my experience, and a lot of others use these tools, run between the 38.2 to up to the 61.8% retracement of the previous move. That's this move down. So you go there. Right now we're at the 30. We've retraced 38.2%. Again, a key Fibonacci level. And you saw earlier on that other chart I gave you, I had two other levels. And again, this never fails to amaze me how often I first always do my price support and resistance levels. Then when I turn the fibs on, I don't have everything marked on this chart. You'll quite often see how the fibs line up. So for example, remember that 1849 level, the bottom of the trading range, you can see the 61.8 fib comes in a hair above it. And so I talked about that, and I'll say it again in advance. If we get there, I don't think we're going to get there, but if we get there, it's not an initial pop, one tick over 1849. You give it a little room. If they manage to pull it up that far, they're probably going to try to run. There's going to be a boatload of stops for short sellers, probably just above that level. And so what I like to do is, give it to the end of the day. If you want a little more aggressive, tight stop, you can go a 60-minute close. But you got to always try to envision where the algos and humans, those are big trading desks, where are they trying, if they're going to do a stop raid, where are they going to take the market or a stock to get there? And their goal, again, is to clear out the maximum number of stops. Because if you are, let's say, working, trading desks at Goldman Sachs, and you believe the market's going down, and you've got enough buying power to run the futures up, maybe it's at night, and you can pop those stops, it's going to cause a spike up in price. You get to then turn around. You were long into it. You blew out the stops. That increased your long position, more profitable. And then you get to turn around and short at a higher level. When you're shorting, it's the opposite of buying. When you buy something, you want to buy it at the lowest price possible. When you're shorting, you want to buy a short at the highest price possible before the turn comes. And there's a downtrend line, everything else. So like I said, my plan hasn't wavered. I've been talking about it daily. I will, consider shorting up to, but not above 1850. Anything above 1850 is where I'll start to consider where exactly to stop out, how to stop out, whether it's a hard stop or a scale. But as of now, I'm pretty much, like I said, back to full short after milking that 8% run down. Gained plenty of active trading account stuff along the way, but I've talked to you about, the kind of the bigger picture and where we're going. So that's that. Let me get to the other stuff. Let me just jump back to that chart I gave you a second ago and just see where we're at. So we're on the trend line, and again, the opening bell, maybe they pop it up there, and if they do, anything up to about 1800 or so is objective short, because you're shorting into resistance, as would be another pop if they take that out. That would be the bottom of that consolidation zone, about 17,942, and then again there's the big level there, about 1850. So you've got the levels to watch. Animal spirits are back in the market, and that's exactly what I expected. That's why I said I was covering on Friday. Because of that, it's you don't go from one of the hottest bull trends in the Nasdaq 100 to completely cold and bearish like that. From my experience, there's a top. We had that trading range, and then you break down, and there's just been, as I said it the other day, a massive amount of people that have been wanting to get into NVIDIA, wanting to get into the Qs and get into AI and everything, and there's your opportunity. So let's move on. Let's talk about the the bigger picture again, where we're probably going here. So there it is on QQQ. We go to the daily chart, and this is simple. This is the very simple for swing traders. I started out, I got you a 15-minute chart out this morning and the one I just covered. And that's, that's kind of honed down entries, exit, if you like to micromanage even swing trades like I do. I do active trading, sometimes it's day trading, sometimes it's 1-2 day trades, and then typical swing trading. And so that was it. So we had a short there post FOMC. So far that marked the high for the Nasdaq 100. Then, of course, you had a second sell signal when you broke below the 433 level. If you missed it, you had 2 days of back testing to short it. And then, like I said, we cover that, game the bounce. T1 was there, not randomly. It was support. Support once broken becomes resistance. And we hit that yesterday, which was an objective short. We're a little bit above it in pre-market. You can see it's this white candle here. But if they sell it down, especially before the open, it's only 15 minutes, then you're not going to see that candle. It's going to disappear because that doesn't count. That's just the pre-market session. But again, like I said, this is a daily chart, and that's why I use those intraday charts. You don't see anything. When I look at this, it's imperceptible. You don't even see, the levels aren't there with the reactions, especially. And that's why I use NQ futures. I know a lot of you, the majority trade QQQ, but the futures trade around the clock, so you have more reaction points, more, to look and identify supply and demand or support and resistance. Okay, let's talk earnings, and let's go with Tesla. Somebody asked about that. Now, I didn't do this yesterday, and I almost did, but I hate kind of going in hindsight. You've heard me say this many times in the past, that if a chart is clearly bullish or bearish going into earnings, the technical posture, not the trend. And I have to always say that, because you're going to look at this and, God, this is nothing but a bearish trend. But you had strong positive divergences, and so that gave Tesla the pop. And you can see that trend line. I've had it there for a while. We're right into downtrend line resistance. So that's probably about it, at least for today. Tesla will probably get sold out at the open. Who knows? I don't have a position. I even considered taking one. Just what I'm going to do for you guys, by the way, I know I didn't mention Tesla in my expectation. I would usually play that game in earnings season where I go through the stocks and I make predictions and have well over a 50% success rate doing it. And again, I always say, if the charts are clearly bullish or clearly bearish, that's when it's pretty clear, or not 100%, but where the odds are going to favor, that's going to be the direction the stock's going to go. So Tesla, positive divergence, and boom, they popped it in pre-market, and you'll see. So now let's go over the rest. That's important. Where do we go from here? And then I'll give you my thoughts on the rest of them, and that'll also kind of ties into the market. Meta has, I've been talking about forever and a day. This trend line here, it just keeps walking it up. We have not had any sell signals at all whatsoever in this trend line. The primary trend line hasn't broken yet. My yellow line I have here, price supports 454.43. It's really the bottom of that gap. Those are my big levels. Meta is coming off a big divergent high, just like QQQ. It's been in a trading range, except unlike QQQ and some others, it didn't break down yet. And as I mentioned the other day, there's only 3 holdout. Roughly, remember, all my check marks, I'm pretty complex. I look at treasury bonds, crude oil, the inflation trade. I look at the stock market. I look at the top sectors of the S&P 5. So remember, I had all 5 sectors, check. All 5 broke down, 5 check marks there. The formerly known as Mag 7 stocks, Apple and Tesla have long since rolled over, so there were check marks. And then Apple broke my, key support, had that failed breakout, so there was a check mark. So the only holdouts, as I mentioned so far, the remaining check marks I need to see to give me a high degree of confidence that the post-Fed pop was the top, and that we are going down and the bear market rally is over and a new downtrend, primary larger downtrend's begun. I need to see those remaining FANGs or Mag 7 stocks break down. That's namely Alphabet, that's Google, Microsoft, and Meta. So, and Amazon, Amazon too. So the FANGs is, same story. They've been the holdouts, and they're usually the last to buckle. That's a signature of any bull run. You see breath start to deteriorate, and the bigger companies are sucking in all the cash. So there's Meta, and there's the levels to watch. I will say any new high will be a marginal new high. And so for those, and I know there's a couple on the site that love the snide comments. I call them resident trolls now, and I figured they'd be popping up to yesterday after the 3% rally. They probably weren't there when we went long the other day and gained most of that and covered the shorts. But either way, I'll welcome anybody, any comments. You guys find whatever you want to post. However, so when I say that, first of all, I don't have any money on Meta, that if it does make a new high, it'll still be a divergent high, and there'll be no sell signal. That's it. So this is a bearish setup. It is not an actionable trade, but if it breaks down, it has importance because this is one of the top stocks. So the trend line, you want to see a solid break of that, especially a daily close below that primary trend line. Again, that comes off the November 2022 lows. And you want to then see a break of 450, 443 to most likely put the nail in the coffin. That happens, I'm going to put high odds that the gap will be backfilled. We'll come down to the 200-day moving averages, which I've been calling this, this correction down for a while now. Even before any knew there was a correction, an 8% drop in the Nasdaq 100. Still got plenty to go, and that's where most of these stocks are going to go, on or around the 200s. If any one of them reverses shy or cuts through, you look at them collectively, you look at the indexes, particularly the Nasdaq 100, and then you kind of then decide, all right, when to cover those positions. So there's Meta, and my bet is down based on the technical posture of the chart. Thursday, that's today after the close. Thursday morning, I'm just going to talk about before the market opens. We have Caterpillar. There's others, obviously, but this one is important. It's a big industrial, so kind of gives an eye on where the economy is going. Obviously, if the economy is strong, then Caterpillar is going to do well. Now, there's a lot of federal stimulus out there keeping some of these companies, just like the semis, with the CHIPS Act. And there's a Build Back America or whatever it is, a lot of that, and of course the bridge got taken out recently. So I'm not betting this one, but I'm going to tell you that my guess is tomorrow, and it's a big one for the industrials, down. It looks, we can see a clear breakdown here below the uptrend line, big divergent high. It's been building divergence for a while, and just a little like the market, everything's snapped back. Remember, everything's indexed now. So, to go long, you could blindfold me the other day when I reversed QQQ. I could have, reversed all this. And I'll get to that too in either this or a later video. A lot of the other trade ideas I've thrown out there recently, home builders, broker dealers, retail, XRT, a lot of those, and nearly all of them just hit their first or second price targets and then bounced as expected. So the bounce in the market was to be expected, or it was likely, and now I think that bounce has most likely run its course. So if you want this one, let me know. I'll have to mark up some targets. I don't have the initial targets. I'll just tell you right here. There's one right there. 333 is where initial stop post earnings. All right, now let's get to the big stuff, the stuff that'll move the needle. Caterpillar moves the Dow, might impact the S&P a little bit, but it's not going to touch the Nasdaq. What matters there, tomorrow after the close, the king of AI. So obviously, this is one I've been waiting to go. It hasn't gone yet. It did get, well, hold on. Let me correct myself. It took out the trend line, so there was a sell signal there, but my level that I've had for a long time is 397. That's the yellow line there. This is kind of like to get out of dodge mode. So this is where, we'll go down there first. We'll work our way down to about 376 to 364, the 200-day moving averages. This is where the next tradable bounce that will most likely be gaming. Again, we'll assess the charts when we get there. Just remember, this is heavily indexed, so it's going to move up and down with the market. It's the same thing. It's another 10% drop, give or take, from where we're at now. So we're already good for an 8% drop on the Nasdaq, which we turned around and gamed on the long side. So add that another 2% or so there. It gives us 10%, swing already on the Qs. And now if we game it down, this is Microsoft. That's about 11% to that level there, and about 8.5 to the 376. I say that because the 200-day moving averages are right in the middle. So I think we'll cut under 376, get close to that 364, 50-ish level. And this one looks down after as well. And so I'm going to make another prediction. Call me a fool. I always say because he's making predictions like this, fool's errand. I think what we're going to see, unless they hold their tongue, and this will just crater the market ultimately, if Microsoft, particularly Microsoft, gives a little color on AI. As you guys probably know, most of you know if you've read up on that. If you don't, here's what's happened with AI. A quick summary. AI, it's nothing new. It's been around for a long time, as I said, but it became new to everybody, or I'm sorry, to just about everybody when ChatGPT came out, because it was gimmicky. It was like, could sit there and write an essay for you and take tests and all that. And so it was, the coolest thing since sliced bread to a lot of people. Then unbeknownst to the other big tech companies, Microsoft got a jump start by investing in OpenAI. And then boom, that was it. Alphabet said, we're not going to have it. They just pulled a 180, cut a lot of product lines funding. They just put all their resources in. Microsoft too, by the way, has continued to plow a ton of money into AI. Where I'm going with this is I've yet to see or be convinced what type of return on investment's there. And of course, they're going to, they're going to say it's longer term, it's going to come. How many people are signing up for the premium Chat GPT and all this other stuff? I'd love to see if there's some color in that, because I know where it is. They're spending a crap load of money, diverting a lot of resources into it. And then ultimately, how are you going to monetize it? And so the market, market can be patient. We'll see. But that if they come out and you learned, if anything, I've said this 100 times. Tesla's a great example. Tesla earnings, they missed everything. Top and bottom line, they missed, and the stock's rallying. So I always tell you, it has nothing to do with earnings. It's all about the market's reaction. Tesla was heavily shorted, most likely being as low as it was. Dip buyers are stepping in, blah, blah, blah. So it doesn't matter what they report. What matters is how the market's reaction is. But I would like to hear, and there is my prediction, if they give any color on any type of how their return on investment is so far going, or how it looks going forward for all this money they've been plowing into AI and AI-related products and services, then that'll if nothing else, that'll be the catalyst. And then that will be really the beginning of the popping of the AI bubble, in my opinion. And it may or may not happen this quarter. I have no idea what they're going to talk about on their conference call and after they report. But there's my take, and you have my level, so I bet that one down. And that's Microsoft. And again, one of the last holdouts. And again, with the race for AI, by the way, I told you Microsoft got the head start, and then Google just went outright crazy on it. Been all over the place with their AI. And of course, market loved that because the market loves all things AI, right? NVIDIA being the poster child, we all know that. Who didn't do AI? Apple. Apple sat back, and the market, punished them for that. Because everybody, wants to be with whoever's, plowing the most money into AI. And so maybe in hindsight, it'll turn out to be a good thing. If again, it's all, how's it going to pay off? When's it going to pay off? And how long are market participants going to be patient for these companies continuing to plow money into that? And again, divert resources. Reading up on this, they're hiring or contracting. They're hiring AI specialists at top dollar, top talent, programmers and all that, and they're cutting back capital spending, capex, in other departments, and that's not a longer. Pretty much, they're all in on AI, is what I'm trying to say, to a greater or lesser extent, not literally, but to a large extent. So, all right, back to that. Where do I think Google goes? No, it's been building these big divergences for a while. As I've talked to you about recently, we got on QQQ, we fired my long-term trend indicator, one of them, the PPO crossover, and Alphabet's one holdout that hasn't done that yet. And again, this chart is kind of sloppy. There's my level right there, 149.46, but if I have to, I bet that one down too. I'm not going to put any money on it. I'd rather bet it via the NQs, which I'm doing, because then I'm diversified. Because if Alphabet goes up after earnings, but then Microsoft tanks, the offset should be Microsoft's a bigger company. It's a $3 trillion, has a higher weighting. And so that would influence, bring the Qs down, all other things being equal. Intel too. Intel used to be the 800-pound gorilla in the sector, and now it's NVIDIA. Um, I haven't even studied it. We had divergence, it burned through that divergence, but oversold. PPO looks poised to cross over. I could see if it thrusts down to here, that's it. So I'm going to call that one up actually. Yeah, I'm not betting it either, by the way. I don't have enough confidence, but just looking at the chart, yeah, it's not clearly bullish or clearly bearish. All I see is a pending potential bearish PPO crossover, and I do see an extreme oversold reading. The last time Intel was that oversold, you have to go all the way back here to October of 2022. We went long right there, and we went long again here. So that's typically when you want to be buying Intel. So if anything, if I had to bet it, I would call it up, with minimal downside. And when I say up, by the way, guys, very, very, very important. I say this all the time if you follow me for a long time. It's not what happens in the after-hours session. Sometimes it is, and sometimes that sticks, but that's often noise, and it can be faded. It's, when I say up, I'm talking the next tradable trend coming out of earnings, over the next couple weeks or so, which direction is the stock going to head? Not, is it going to be up or down initially in after hours? Sometimes they spike up in the after hours, and they go down and then back up. It's a three-part process. The earnings release, numbers come out, algos parse the data faster than humans can and start firing off buy and sell programs. Then the humans start to read the numbers and talk about it on CNBC. Then that's that. Then comes a conference call, which can negate any up or down move based on forward guidance and outlook, and a little more color on the numbers. And then comes the next day when the market opens. And then you have institutional, everyone, there's more liquidity. And then sometimes a post-earnings rally in the after-hour session or drop is reversed. So that's the three parts there. All right, there's opening bell. Let's see if we can get a push up there. That one last thrust up on NQ. Here we go. We're close. We're on the trend line. So that's it. But like I said, we're close enough, in my opinion. And so there's your levels to watch. If we pop 1800, you're going to be in this trading range. There is a mild resistance. I'm going to give it to you now, since I didn't have it on the chart. In the middle of most trading ranges, give or take right around the middle, you can usually see a line that delineates the middle of the trend, but it also acts as support and resistance when you're below it or above it. And then once you cross down below it, you usually go back down to the bottom of the range. So that would be, other between that the two levels I gave you earlier, potential resistance level. But yeah, I've had enough out of, milked enough on the long side, and then I told you I started scaling back in short, and I just added my last lot this morning. Again, depending on what I see, my convictions are strong and we go up here, then I'll add more. Otherwise, I'll just sit tight and not keep adding to a position, because I do think we, based on everything with the big market leaders coming up, I think we'll see profit taking in those for the same reasons I said. Again, fundamentally, we'll see. All right, let's just rifle through a few of the recently highlighted trade ideas in no particular order. I'm looking at one list, my things to watch list. There was XRT, predicted this breakout would fail. We had a nice, beautiful trading range here, multi-year trading range, broke out, beautiful bearish rising wedge. I gave you all these targets here. And again, I'm doing this because it all goes together. These are sectors or even subsectors, if you will, of the larger market, and this is retail. So this is an important one because this is showing the consumer. If the consumer's spending a lot of money, XRT, the retailers, should be making money. And again, it's not. The charts are forward looking, and that's where a lot of this is where I think we're looking at a big drop coming in 2024 this year, and I think it just started because economic data is so, in many cases, either outright flawed or just lagged by the time it's reported. By the time it starts to turn, and you got to wait monthly or quarterly for the numbers, and even then they're somewhat lagged. Anyway, that's where I think we're going. But this speaks louder than anything. Bearish rising wedge breakdown. We went in. Then I had that yellow level. We took it out at 74.19. That was kind of the all-in moment. Hit T1 perfectly, bounced, and that's it. So this is swing trading. Short cover. T2 was here. There's 200-day moving averages. T3 zone. T4. I called this one to the bottom of the zone because that's what happens after a false breakout, and then ultimately down probably below it most likely. But we'll take it one step at a time. I just wanted to point out that there was a lot of stuff the other day, sectors, trade ideas we had that hit support, and so the bounce is nothing but a reflex of bounce. Tip buyers looking to come in as they will do. What else? We had JP Morgan I highlighted for you back a while ago, the king, and predicted that one down. I believe I called that one down for earnings. Post earnings, it had a big gap down. These were the levels I had in those previous videos. At first 178.56, hit it, bounced 173.60, and look, we're at a downtrend line now. So somebody asked about the financials yesterday. I think that's this is the big one. So you have both a gap backfill just a hair above at 193.90, give or take, and then a downtrend line. So an objective time to short JP Morgan, up to but not above 193.90, and that downtrend line. What else do I have? These were in the leading indicators, ADP and all that I'm watching, and again, that don't mesh with the jobs data because these guys have peaked, and I showed you in every single instance going back 20 years, as long as you can chart these guys. Once they've peaked, and it's clearly a peak top, then the market rolls over afterwards because that's employment. And this is where, okay, so if the jobs market's still at record lows and so strong, why are ADP and paychecks, why did they peak back in 2022? And we're already in the year 2024. Actually, paychecks peaked back in early 2022. So it just doesn't jive well. They should be making more money now, not less, with a strong job market. But anyway, all right, ITB, XHB was the one I gave you for the home builders, or ITB. That one went down here, took out my first target, 103.21. It's back testing it now. That's resistance. There's an objective short to the swing to the next target, 97.38. Then $91 is still my preferred target. Had to take it down to the 200-day moving averages. That's going to give you a drop if you re-entered. Covered that one. That's another 13% or so to my next target. One I like, guys, market access. We've traded this one many times over the years, mostly long, but we shorted it. We went long back here in 2022. We milked a big part of that run, then turned around and shorted right there on that break, milked it down. We've been long and short this one quite a bit, but the point is, we're at right here, 200. 200 is the previous reaction. It was a reaction low there, but more recently, this reaction low, positive divergence. This would be, you can see my levels if you like it. So I got to check to see when they're reporting. I just came across, I've been watching this one, but this morning I thought to mention it to you. I like the setup right now. And again, if they're reporting, anytime you take a stock in front of earnings, it's a crapshoot. It's either going to gap up, most of these stocks will gap up or for or against your position. So use the earnings calendar and just check to see when that is. Otherwise, I'd say, in a vacuum, take it long here around 200 with a stop somewhat below to allow a little whipsaw, keep it out of range, and then target, divergent low like this could bring it up quite a bit. What else do I have for you? IAI broker dealers, T1 already got hit, counter trend bounce, still maintaining these targets. So I like that one as a re-entry. Carvana, T2 for all intents and purposes was hit close enough. We've bounced on it, and that's where I've had the level there, 66.94. Remember, this one was shorted way back here, somewhere off this divergent high. We hit T1 here. We bounced, put in a marginal new, but still divergent high. Did not violate an RR, a 3-to-1 or better RR for, so it shouldn't have, it's still the same trade. Went down, hit T2 at downtrend line resistance now. So if we get rejected here, that should open the door for T3. Obviously, you need to break the recent lows, and then that'll open the door for T3 and T4. However, there's one that looks better than others. Cars, is it? Cars.com. That one's got a divergent low on Carmart. Carmart, mentioned that, taking that one back here a while back, giving you 2 targets. Hit that, but it's forming this big wedge. So there's another potential bullish setup for you guys I wanted to just share. Stocks, semis, T1. We came close to T2. Not close enough that I'm not going to consider it hit. But I do like Nvidia, and I reshorted. Actually, did it yesterday. Got back into SMCI. I told you about. I'll get to that in 1 second. But there's a downtrend line for the semis and price resistance at 218, and I still maintain these other targets, and will most likely add additional targets there. So it's all about this one. And then NVIDIA doesn't report. They report later than most of the other companies. Last time they reported was February, so we've got May. Got another month or so till they report. But a beautiful short entry right now, guys. It doesn't get any better. Can't promise you it'll play out, but I promise it's subjective. Remember, NVIDIA, just like QQQ, had a well-defined trading range. And this was, as I said, the last thing I was waiting for my kind of all-in short moment. And it did it. Took out 840. 840 was the bottom of that range, and it's back testing. So again, I can't promise it'll work, but I can promise you this is one of my favorite. If you missed it there, and it happened quick that day, if you weren't in front of it or didn't jump on it early, this is your chance to re-enter. And they may try to blow out the stops. And if they do, you have a downtrend line just above, and then the midpoint of the range is resistance. Anything much more than that, they're probably going to take it up to the top and maybe above the top of the range there. But as of now, like I said, it looks like an objective short entry. And if it does, then the semis are done. If this one rolls back down. And then it's little partner in crime, SMCI. Told you shorted that one. Covered it the other day for the first time for a 30+% gain. And boom, it's right back to, I have a resistance zone here. So it's an objective short here. Anywhere up to, but not above the downtrend line, in my opinion. That would be your entry price, entry objective short entry, and I'm still maintaining that sole price target. I only covered the other day because I thought the odds were good enough for a bounce in the market. And why ride out a 15% bounce short if you can sidestep it or turn around and profit from a long. So there's SMCI, NVIDIA. What else do I want to cover? That's it. I don't talk about it much anymore because I was harping on it so much more before, many others were, and then it did matter. And, I said, market would start to take note, and it did. It finally took the Nasdaq 100 down 8% so far off the highs, and that is this inflation trade. These are rates. This is a 10-year bond. And it shows these rates. They had a divergent low. It just can't really get any traction. Nobody's stepping in and buying treasury. By the way, and I think we will at some point. I think if I'm right and the market rolls over soon, we're going to see treasuries rally. TLT should do well. And that's usually when Market Access does well because they're a big bond trading company. They're electronic trading. And so remember, treasuries, we went long right here. Late last year, caught the bulk of the biggest rally that we've had in years on treasuries, and then closed it out at the final target, turned around and shorted it, wrote it down, hit my first and now second target. It was a target zone I gave you. We hit the top, then the bottom. We're still in that zone. That's support, and we have positive divergence. So this is what I think will most likely happen is if the market rolls over soon, treasuries will start to rally. You have a downtrend line, which would be an initial swing target. It's really this price channel here. And if that breaks, we could see some more. And so that would mesh with the stock market having another leg down, taking out the recent lows, going to my deeper price targets on QQQ, because two things. You should see a flight to safety bid into treasuries, meaning institutions selling stocks and buying bonds. That should be a lift. And slowing economic growth expectations. With the market rolling over, and therefore lower inflation expectations, and therefore rates will go down and bonds would rally. So, and I've said it for a while, and we've held up there. You can use TLT as a hedge, indirect hedge to equity shorts. And if everything works well, then they both go up. Your QQQ will go down, and then TLT can go up. But otherwise, if bonds rally for the other reasons, just the natural abatement of inflationary forces, that would be net bullish for the stock market. So it cause your QQQ short to go against you, but then you'd be profiting on Treasury. So I like that kind of offsetting indirect hedge. Treasury long, TLT or CB if you trade futures, or you can use a 10-year. There's just less volatility. You're either going to be, I always say, you're going to be right or wrong on bonds. Might as well get paid for it. And so TLT will move up and down more in response to changes in interest rates or money going into bonds generally. All right, I'm going to stop it here, get the video out. I've got a lot on my plate today, and I'll be back this afternoon, and I'll get some follow-up to you then. This has been Randy Finney with Right Side of the Chart. Have a great